Wells only and his guests are not responsible for any losses you may accrue from having weak hands. Where the haters at? Y'all bitches still ain't showed up. And now, right, we got HEX, flawless uptime. People thought this was a joke. Now they're mad at the chart. This is Whales Only. Glad you guys can make it out. I'm making some claims that are pretty outlandish, but I can back them up. Boom. End of story. There is no other crypto out there, so don't get it twisted. If you don't understand where you're parking your money, you're gonna pay the consequences for that, and that's just how the cookie crumbles. Boom. We're obliterating everybody, literally. There is nobody else that comes close to what HEX has done. Boom. Oh, it's about to get funky. Funkier than you could have ever imagined. You know, Richard Hart is a boss. HEX is literally the best thing on the planet. It's simple mathematics. Right? The reality is that I want to be rich as fuck. There's only one way to be rich as fuck. That's by sitting on your ass the longest. Yep. That's it. Yep. That's the secret. The guy well told you. Richard done told you. I done told you. Kareem done told you. Maddie done told you. Everybody done told you. Everybody done told you. Shit, motherfuckers still acting like they don't know. Appreciate that.
Yeah.
I appreciate that.
100% safe. There's plenty of games left.
Valiant done told you. Yo, everybody said it. Man, hey, you know what it is, man? Everybody done told you. Y'all's deep. Everybody. My God. HEX agents, bro. Everybody. Australians, man. Everybody gets me. Yo, when is it told you? Dollar told you. Everybody done told you. It's crazy. Yo, what up, everybody? Happy Tuesday to y'all. We're gonna cover a little bit of everything in this stream. Thank you guys for showing up. What's up to everybody in the chat? This one might be a little long because I want to go over the charts. There's a lot of people that probably are new watching the stream and haven't even seen me do the charts at all. So I think it'd be a good point in time to do that right now, especially when we got like a dip coming up. Give people a better understanding of HEX, how it works, all that good stuff. But before we even get to that, I hope nobody within this community is dumb enough to have anything on the Solana network, because they have an active exploit that's currently being hacked at the moment, where wallets on that network, they're literally getting drained right now. So if you happen to be one of those unfortunate individuals that just doesn't listen or learn, you might want to make your way over there and take care of that problem post haste, because people's wallets are getting drained actively right now. And I think the last count that I saw was like 10 million drained so far in USD terms. So yeah, hold on, trying to see what the numbers are. And again, this just goes to show why you really need to do your research and ask yourself, why are people hell-bent on certain things, right? Why are people so hell-bent on just putting their money where it doesn't belong. It's hard to explain, but it happens, where people just find this imaginary faith instead of looking at actual results, right? This is why there's a very popular maxim that a lot of people stick to, and that maxim goes out process over outcome, right? Because you can't really determine what an outcome is going to be most of the time, but if your process is solid, you can kind of ensure that there's at least some level of safety embedded within your review process, right? Because what that means that then at that point is that you're accounting for the downside, right? Well, what happens if you put your money in a contract where you can't take it back out? Are you ready for that? In that case, should you even be putting money in that contract? And for most people, the answer is no. And the problem is that a lot of people don't even, do the due diligence to determine whether they're about where they're about to put their money is even that kind of contract. And that's kind of important when you sit here and think about it, because what we're trying to do is invest to make more money, not lose it, right? So when you see instances like this where it was 6 million as of an hour ago to the minute, and I don't know how to. Let me see. I don't know if I can find a link for this chain. Oh, hold on. Let's see. Might have found a link. Yeah, not sure I know what the hell I'm looking at. So we'll just defer to Twitter on this. But 6 million so far. So as of an hour ago, you gotta think it's higher now. But this is happening, right now, real time. Um, and it's unfortunate because a lot of people are losing lots of money. Um, and this is the name of the crypto game, right? This is kind of the thing that regulators look towards hanging on to, right? When they are looking to invoke their maxims on us, right? Because that's ultimately what it's all about for them. It's all about them trying to figure out how to control what we have going on, how we're trying to find a way out, etc. So this is why it's important to understand all of these different layers. You got to. Otherwise, you're gonna get blindsided by something that you didn't see coming because you're not paying attention to all the angles. I say that repeatedly. It's for a reason. There's been many instances where I thought I had reached the end of the road, and I'll tell you what, I'm still going. Um, so there's always something new to learn. Um, Always something new to discover, right? And this has always been the case with Hex, right? We always seem to unlock new layers of understanding for those that do the work and put in the time to understand the system. And interestingly enough, I was asked a funny question today where person asked when the log base 2 pattern for Hex is invalidated. And maybe that person's never heard me talk about it, but the log base 2 characteristic that I continuously speak about with regards to Hex is its nature, right? Like that's how it grows, because that's how network effect grows. So if you haven't seen my first video, please go do that, because that's the very basis of all crypto knowledge. If you don't know anything in that video, then you probably should not be dabbling with cryptocurrencies, period, because you don't know what you're doing, plain and simple. And the bad thing about that is that limits your opportunity, and you're here to essentially expand your opportunity set, right? You're here to make money. So that's why you have to step up to the plate, Put yourself in uncomfortable situations, talk to people you wouldn't normally talk to, even if it is with an agenda, because guess what? We're all on the same page. We're all trying to get paid. And this is something that, everybody has their own way to going about doing it. I like the risk free way, especially when I'm talking to people I don't know. And that's why I love Hex so much, because Hex really gives us the ability to talk about generating wealth in a safe, efficient fashion, right? While understanding value, because that's really the most critical aspect of anything that we do. If you don't understand value, you're going to make the wrong decisions, period. Doesn't matter if it looks good in the short term or not. It's going to be the wrong decision. Very important people understand that, because that's ultimately what leads to you winning in the long term. And that's ultimately the main objective of investing. It's not about being right. It's not about being wrong. It's about making money in the long term over and over and over. And these are the things we want to focus on, right? Because when we're making the incorrect choices based on misinformation, right? Like I still see people talking about uh, correlations, and they just do not understand them. And hey, you can talk about whatever you want, but your opportunity set is limited when you don't understand what you're talking about. And that means you're going to miss opportunities because you're viewing things from an incorrect lens, right? And this is very important because, again, we're all here trying to maximize our opportunity set, not minimize it. So that means we want to ultimately be successful, right? In whatever endeavor we're trying to be successful in. And it sounds very plain, but it's not, right? This is why these things have to be discussed. Um, Making decisions based on misinformation always leads to failure, period. There is no, caveat to that one. You just operate based on misinformation, you get taken out. Market doesn't care. Market cares not, and that's very important for people to understand, because this is why it's critical for people to realize that their feelings or emotions towards a subject or topic, highly irrelevant, because the market dictates the outcome. And if you're making the incorrect decision based on misinformation, the market is going to let you know, because the market does not care. Now, here's a caveat to that. The caveat to that is that you could look good today and be bankrupt tomorrow, because that's how markets work. And this is the thing that's very difficult for people to understand. And we're going to try to hatchet that little scenario a little bit because, you know, people really don't get it, right? Now we have the SEC coming out of the woodworks talking about 9 coins are securities out of nowhere. That's number one. Number two, now they're trying to attack, or they're feigning to attack, Coinbase. Right? I mean, now you're seeing these regulators acting like they have something to do, where you've had all these clowns begging these other folks to regulate, right? For a long time, this is what you see from the Bitcoin maxi community, even though cryptocurrency was literally made to circumvent the duplicitousness of regulatory policy, because it's never to benefit you, the average person, even though that is the narrative, right? And this is important to understand, very important, because this is again how you end up making the wrong decisions, right? You see all the the headlines about Grayscale trying to battle the SEC over this ETF approval, right? Now, why the hell does that even matter? Why are they so hell bent on getting this ETF thing passed? Do they really not know that that is going to suppress the value of Bitcoin or Ethereum or whatever coin they're trying to ETF, right? Do they really think that's not going to happen? Because that's exactly the point of it. That's what those products are literally designed to do, right? They're either going to send it to the moon or they're going to suppress it. And it's really that simple. There's no real market where you can short Bitcoin, right? Now, if this ETF market becomes active, there it is. Boom, there it is, just like that. So that is not something, I mean, it'll be just like gold. Only lately has gold seen a pump where it's gone up like 80, 90 bucks, right? So even gold gets the business too from the regulators. And these are kinds of things that it's critical for you to understand as an individual that has to make financial choices. Because if you keep falling into the traps that the system sets, right, the monetary system, if you keep falling into these traps, you're never going to escape. And this is why my streams run so long, because I run into all these nuanced tidbits of information that are critical for people to understand. Because if they don't, they're going to make the wrong choice. I literally have streams on correlations, how they work, what they mean, all that. And there's still people that don't got a fucking clue. Don't be that person. Educate yourself. The information is free. Decision making, or let me rephrase, the information is free, but bad decision making costs you a whole lot. Right? And that is only something you can change. So keep that in mind. Do what you're supposed to do, right? To make sure that you are living the life that you want. Because that's the whole point of this crypto thing. That's the whole point of this market thing, is trying to figure it out so that you are making the best decisions, right? So that you give yourself the optimal opportunity set. That's ultimately what everybody's trying to do, right? But everybody likes to throw their emotions into the mix. And this is when you start seeing all this nonsense. People start talking about maximalism and toxic maximalism and all this BS, right? When it's very simple. We like things that work 100% of the time and are done a certain way. If you can't comprehend that, then you got more learning to do, because there is a standard that's been set. And this is what Hex exemplifies. It's very simple, right? I even did a stream on that. Why I don't talk about projects, why I only talk about complete financial products, right? So these are the kinds of things that if you're new to the space, you have to learn them, because otherwise you're going to get blindsided and the market is going to make you pay. Market don't care, right? And this is what we see, because whoever was banking on living off of the returns of Hex, right, and not staking or whatever in the short term, well, they learned a lesson, because every time people talked about Hex, they talked about staking long, not keeping it liquid, right? So they also learned a lesson. So everybody learns a lesson. It's just, what lesson are you learning? Because there's always a lesson to be learned, right? And these are the kinds of things that, how do we come to terms with exemplifying, or better yet, ascertaining the goals that we're trying to achieve? A lot of the times we don't even know what we're trying to achieve, and that's the biggest problem, right? A lot of you don't even really want to be rich. You just want to not have to deal with everyday BS, and that's perfectly fine. But you have to define that, because that's okay. But you have to define what it is that you actually want from life. Otherwise, you're not going to find what you think of as success. And this is critical, because until I realized that, I didn't know what I was doing, because we're just, essentially pissing in the wind. And nobody's really trying to do that. I mean, look at all the people that are hurting from Celsius right now. I bet you they all wish they would have listened. Because there was plenty of people out here telling people stay away from that. And plenty of people are going, to zero with that. And they're not going to get anything back. Period. They're just not going to get it. I mean, there's so much going on right now. Right now, you got the Michael Saylor stuff happening, where he is taking a so-called charge, right? And a lot of you guys might not know what that is, so let me explain. And long story short, um, an accounting measure, right? Because as long as they didn't sell any of their Bitcoin that they have on the books, then it's just an accounting loss. It's not an actual loss. So what it means is that on paper they don't look as good as they did by $900 million. But did they actually lose the 900 million? Probably not, because that impairment charge typically applies to financial statements only. They're not really accounting for um, goods and services. They're mostly accounting for um, what is it called? Like intangible value, right? Like brand value. And we'll go over the definition so you guys can see it. And I'll just read it to you from there about that instead of me just trying to remember. Because, of course, it's too much. So let's see. Impairment charges. Because these are things that you're going to see now, right? Because now the legacy space is merging with the fake crypto space, like I told you it would. Because that's what it's all about. It's just about them trying to find their way to essentially, let me see something. So them trying to find their way to essentially interject themselves into the system, right? And we've talked about this before, ad nauseum, and this is very important to also understand because again, how do you find the success that you're looking for if you're not making the right decisions, right? So an impairment charge. Let's just go to the short and sweet. An impairment charge is an accounting term used to describe a drastic reduction or loss in the recoverable value of an asset. So it's kind of like just marking it on paper and never actually executing that transaction because then it would become an actual loss, right? Not just an accounting loss, which is an important thing to understand here. And it proceeds. Impairment can occur because of a change in legal or economic circumstances or as a result, blah, blah, blah. Impairment charges may be booked as goodwill for the acquiring company in an acquisition. Goodwill is an intangible asset that a company assumes after acquiring another company. The Financial Accounting Services Board rules for impairment charges of goodwill outline that companies must determine the fair market value of assets on a regular basis. So, because this is crypto, right, it could fall under this special category on a financial statement because there is no such thing as a digital asset on the books, right? And I keep talking about this all the time to help you guys understand that what comes out of a person's mouth is not relevant. It's what's on paper that's relevant. And this is exactly how the game is played, and this is why you must know this. So as you continue to read, it's all really a bunch of hoopla, right? Because long story short, the fair market, the mark to market value, right, what it costs right now is significantly lower, right, than that number you saw, because that number is based on a specific date, and that date was more than likely June 30th or whatever, whenever the last day of Q2 was. Let's see. Uh, Give me a second, guys. June 30. Here's daily. June 30th. Yep. So assuming that that's the actual date that they used a 19,900 number, right, to book the position. So theoretically, their position looks much better today versus that point in time. But again, um, it's just an accounting thing. Doesn't really mean anything unless they actually sold the Bitcoin. Okay, unless they actually sold the Bitcoin, it's irrelevant. Now, what was funny about the whole Michael Saylor thing, stepping down and all that, is that the guy basically uh, is acting like finding Bitcoin is hard. Like he's literally no longer going to be CEO to strictly try to find Bitcoin. I don't know if he's paying attention to the market, but there's plenty of it flowing around out there. So if he happens to come across this stream, bro, just look at the market. People are selling it. It's not hard to find. Not sure how much Bitcoin you want because you clearly cannot afford all of it. So there you go. But yeah, so that's an impairment charge. It's just an accounting thing. It's not real. It's just a paper number. The mark to market value is what you need to concern yourself with, along with whatever else the entity actually does. um, you know, again, this is just GAAP, right? Generally accepted accounting principles. And if you know anything about that, then you know that's also just more funny talk or funny writing, right? You find accounting fraud happening all the time. Some of the biggest scandals are accounting fraud that we've heard of in our history. Ponzi schemes, accounting fraud. That's all that is. All that stuff is accounting fraud. You're just looking at data and ascertaining whether this makes sense or not. And you just can't lie with numbers. It's just not possible. And people try to, and this is how they get caught. So that's essentially the long story short of money laundering, uh, you know, fraudulent accounting. This is why forensic accounting is a big thing, right? It's easy. It's not hard. If you need some forensic accounting help, holla. This is really it's very basic. It's simply 1 + 1 = 2 on one side versus 1 - 1 or 2 - 1 = 1 on the other side. Like you're just really balancing assets versus credits, right? And the very simplicity of what the exercise requires is what, in fact, makes it so difficult for many to wrap their head around. Um, but at the end of the day, it's very basic. And this is speaking of assets versus liabilities, right? Here you're seeing the tangible net worth value of a company, and it's total assets minus liabilities, however they're defining that here. I'm guessing they mean total of both, uh, minus intangible assets, right? So if this was Michael Saylor, the MicroStrategy entity, right? This would be assuming, right? This is the only intangible goodwill type cost that they have on their books, which I don't know. I've never looked at their financials. It would be minus 900 million, right? So it would be 35 or 3.5 billion minus 4 billion minus a billion. So that would be the tangible net worth of that company. And again, these are just accounting functions. They're not the real value of a company. They're just values that you see on a financial statement that people talk about. When a company is going to be bought, you're looking at the profits that the company's making versus what they're actually doing. What they've actually done and what they could do. But again, you're as a buyer, you're not giving anybody the value for what you're going to do. You're giving them the value for what they've done. right? So this is also important to understand when you're looking at a stock, because the messed up thing is when I came in the game, and thank you for the super chat, Jesse James, appreciate you. My pleasure, man, my pleasure. And yeah, we're still gonna do the hex charts. I'm just talking through this other stuff for now. We'll wrap it up here shortly. The important stuff to understand here is when you're looking at a stock, you got to understand what the market is looking at with that stock, right? Because you can break down that stock financially a million different ways. It means nothing. What ultimately matters is what is the market viewing with regards to the sentiment of that stock, right? Because companies beat earnings and still get slam dunked after they beat because they missed on something else that had nothing to do with earnings. Maybe their forward guidance was bad. Maybe the market expected a certain product to sell a certain way and it didn't. And because of that, forward guidance looks bad, even though they didn't say anything about it, right? Like these are the things that ultimately actually happen. In fact, one time I was doing research on a company and I think the freaking CEO, like this was crazy. I can't even remember. I can't even remember what it was. Like I ended up discovering this on TV in real time. Like it was the craziest thing. I think the guy got caught up on like arson or murder or some crazy. Like it made TV. This was like in 2010, so I can't remember exactly what it was, or maybe 11. But it was crazy because it literally made it happen in real time. So how do you hedge that? You can't hedge that. That's just knowing who you're doing business with, and that really only comes from meeting somebody in person, right? So that's something that's hard to do. People see these VC entities and they're just really throwing around 500K here and there, right? It means nothing at the end of the day to them because well, what are they doing? They're just using the law of large numbers to their benefit. What exactly are they betting on, or what expectation do they have when they're just tossing 500K, a million all over the place, right? Because they have billions to allocate. If you see the headlines, you see that these VC funds, they have billions and billions of dollars to allocate. There's tons of people with billions of dollars out there doing nothing, believe it or not. This is true. Important, right? So, how do you get around that? How do you get around that? It's about understanding the bare minimum. That's honestly the most important thing to know about anything. If you don't know the bare minimum, how can you learn anything above that? You're going to be missing all of the really important things that you need to know. Right? I remember when I was in school trying to be an engineer and I didn't even know algebra, for fuck's sake. You know what I mean? I didn't even know algebra at all. Like, how was I going to learn calculus? Because without calc, you need out. Without algebra, you can't know calculus. But I didn't know that. So it's understanding these things about life that are so supremely critical. You know. So the chart set is as of yesterday, where the price was 4.84 cents. Let's see what the price is now. Do I ever have a chart open? Nope. Let's see what we're working with right now. All right, 4.5 cents is the current market rate for HEX for a nice little little rip we had here. Looking into so-called overhead resistance. Now, I wish this damn thing would work for crypto, but decimals, I don't even think this will pick it up. Let me see. Probably not enough. So I'm trying to see if I can get the. Yeah, I didn't think so. I'm trying to get the volume profile to pick it up, but I don't think it either doesn't record it or the data is just too insignificant for it to pick it up. 6 per row, number of rows. Let's see if this works. Works. Okay. So what you're looking at on the right side is essentially a statistical distribution of volume. Let me see if I can get. Yes, it's even better. Okay. So what are we looking at? Now I've talked about this a little bit before, but since we're talking about X now, let's let's talk about what is actually happening in the market right now. What I think I'm seeing. Um, Now, as you guys can see here, this is actually interesting. Everybody's waiting for that 1 cent level, right? And this is really the do all, right? 1.5 cents that everybody keeps talking about. In fact, I think that would be like 97% down or something like that. Maybe even more. Maybe 99. I don't even know. Whatever. Um, Interestingly enough, the market stopped here. Dead stop. 2.8 cents. Now, what are we seeing here? Right? White is up, gray is down. Now let's go back to look at the settings. Make sure I got it right. Okay, so I had it backwards. Up is gray, down is white. So the lighter the color, the damn, did I just forget again? Downward price action. The gray color is upward price action. So let me just make sure I got that right. Yeah. White is down, gray is up. So if you're looking at the quantity, right, horizontally of the lines, you'll see that the dark gray is greater, right, than the light. Like you could just tell just by looking at this hump here that there's more gray than there is light gray. Dark gray versus light gray, right? Now, this is important because what that means is these buyers gotta sell it back down. There's no other option because everybody up here would probably not be interested in selling down here. Is that making sense? Because all the buyers down here are selling profit, right? All these buyers from 1.3 to 2.1 cents, they're all still in profit. Price is 4.5 cents. Why would they sell? Unless they needed to cash out. Don't need to sell. So that begs the question, who's selling, right? Unless they're from down here. And as you guys can see, the volume gets really scant down here. So, unless there's like some maximum pessimism where something crazy just changes in the system and you see like a magical dump and it breaks 2 cents, well, then it has to break 1.67. Then it would have to break 1.5, which it probably won't because of the structure of the market. Again, you have so many buyers down here. They would more than likely be buyers again versus sellers at 1.5 cents. Imagine the cost of a t-shirt at 1.5 cents. That's 23,000 hex multiplied by 1.5 cents. Very cheap. Um, I mean, dream come true for many of us. So I don't even think I need to go into that. So that would be great, right? Now, what would I like to see in terms of the short term? Well, based on the histogram that we're looking at here, you would kind of like to see price stop at 4 cents. And it looks like it's a high probability situation. Now, if it does that, if it does do that, that might mean that we're officially back on the uptrend. Could mean that. The market will ultimately let us know. But this is how you play the market, right? You let it tell you what's true and what's false. You don't tell it what's true and what's false. That's just not how the cookie crumbles. All right. Now we're going to get into the blockchain data. First thing is all the active days on the decentralized exchange for HEX and what is done so far. HEX is in yellow. T shares are in magenta. Bitcoin is in this placid pink color, and ETH is in this orange. ETH is at 40,000 on or 43,000 on his index, whereas the T share is at 51,000. Bitcoin is all the way up at 175 because this is already. Let me see. I want to say 500-600 days after it launched. After its network went live, after the piece of transaction, right? When it made nationwide news and all that stuff. So of course the market took off from there. Low liquidity, et cetera, et cetera. All the things that we have with HEX right now, except for that we don't have that nationwide coverage. Like nobody knows HEX exists. So HEX can't pump like that. It's all word of mouth. It's all whatever the community can accomplish to get the word out because we're not going to have the backing of a news media outlet nationwide to get our message out. That would be detrimental to their mission. And this is important that people understand that because that's literally how the cookie crumbles. So that's why in a decentralized scenario, we're the ones that have to do the work. No expectation from the work of others. You pump your own bags, right? Um, Now Hex is at 22,700 or 22,277. And let's see, what am I missing here? Did I miss anything? That's Ethereum. That is the T shares, and that's Bitcoin, and then that's Hex. Okay, so I was asked what I want to validate this pattern. And I replied earlier that nothing can invalidate it. And the reason for that is because that is the natural demeanor of the system and how it functions and how it operates. Because again, humans interact with it. So humans determine the growth rate and the contraction of it. And the network effect dictates that that's exactly how networks grow when biological organisms interact with them. So nothing can invalidate log base 2 unless we all disappear. And I don't think that's happening anytime soon. So hope that answers that question. And if you guys got answers, save them for the questions, save them for the end because I'm definitely not paying attention to the chat like that. Sorry. So this is the HEX Pulse Week Payday chart, and currently we are at 931 on the index, so we're 9x above where we started Pulse Week Payday. Now, what this chart is being compared to, or what HEX is being compared to on this chart, is the first, second, and third halvings of Bitcoin, right? And the reason I'm comparing them to that is because the big payday was honestly the singular event that we're going to experience in this protocol that's equivalent to a Bitcoin halving. Just because of its size and capacity. Because other than that, the system actually conducts little mini halvings, if you want to call them that, every time. Excuse me, a T-share recalculation occurs. A T-share calculation occurs, and that happens at the end of every active stake that's in the system. Right. Every time somebody ends a stake in the system is doing the math to ascertain what the T-share rate is going to be for this end stake. And at that point, the system is going to determine whether there is a change to be had or not. And when there is a change to be had, that is the point at which that similar halving effect occurs, because the yielding function of the system was just made a little more expensive in hex terms, meaning you must come up with more hex in order to earn the same unit of yield that was required prior to this stake ending, right? And this is how the system maintains and sustains its value nexus over time, right? Because what is the value proposition for Hex? Well, the value proposition for Hex is that you buy this coin, you stake it, you earn yield. Now, when you stake it, determines how much yield you earn, because that is all going to be dependent on how much Hex you stake. If you don't stake a lot of hex, you're not going to earn a lot of yield. And your yield is dependent on how many shares you have, or T shares, right? Because that's how the system defines everything. It defines it in T share terms. And we'll be going through that a little later on. And as you guys can see, the second halving is at, well, let's go to the first. The first is always the greatest pump, right? Because that's the highest inflationary period. And from what we see here, we're at 4,800 rounding up on that pump, the first Bitcoin halving. Excuse the noise. Um, the second Bitcoin halving is at 1,362 on this index, so that's a 13x. Or a one, yeah, 13x. This is a 47x, and the third halving is a paltry 4x. So not phenomenal. And we're I mean, we're at a 9x on a 95% dip. So that's how Hex does it. What is this chart talking about? Well, this chart is giving us the valuation in dollar terms of all of the T shares in existence in the system as of yesterday. So as of yesterday, the dollar value of all the T shares in the system was basically 12 billion. Simple as that. The Hex stock to flow tracker. What are we looking at here? Here we're looking at the T-share rate, and I think it ratcheted up to 0.6 higher. So it's like 23,097.3 if I remember correctly. So the T-share rate keeps bumping. The dollar cost of a T-share, however, is down significantly from the high of like 9,900 something to 1,100 as of yesterday. It's probably a little bit cheaper now because we have a lower price. Yesterday we were at $484 for 10,000 hex. And the reason we track 10,000 hex is to figure out what the T-share rate is, because the T-share rate is literally the dollar cost of a T-share divided by either the dollar cost of one hex or the dollar cost of 10,000 hex. Now, no matter how you do it, you're either going to multiply by 10,000 or not, because either way you're going to get the same value if you do. So if you do 1,121 divided by the actual dollar cost of one hex, you'll automatically get the T-share rate. But if you do it where it's the dollar value divided by the dollar value, as you see here on the screen, you'll get a rate itself, which will be 2.309667 yada yada, and then you would multiply that number by 10,000, which is what gets you the 23,096. So these are the things, little tricks of the trade when it comes to understanding the T-share rate. All right, now APY is at 39.7, and we'll go into how the APY is tabulated towards the end. There's a specific chart that talks about that, or that highlights that. 9.59 is the percentage staked of the coins out of all the coins that are in existence. Here we have the increase in the T-share rate, and as you guys can see, it's pretty consistent nowadays between what seems to be like 20 and up, right? I mean, you still got some spikes down here into the teens, but when it changes, it seems to be pretty consistently above 20 hex. So that's kind of important to note, because again, when's the best time to stake? Yesterday, really, right? But when you're acting for today, it's really just today, right? So if you missed yesterday, the best time to stake is today. Unless you think you have a beat on the T-share rate and the dollar value, and you're not gonna miss out significantly, right? By waiting to stake because you think the price of Hex is gonna decrease, right? If you think the T-share rate, no major stakes are ending anytime soon, and you have a beat on all of that, then you make your assessment accordingly, right? This is what it's about. Because that's how it works. Um, risk is fluid, basically, is what I'm trying to get at. So here we have the systemic inflation that the system pumps or is designed to pump at 3.69 in pink versus the actual inflation that is minting in yellow, which is I'm calling the cumulative inflation here, versus the deferred inflation, which is the inflation that is getting restaked, right, or not being minted by the system, essentially. That's the best way to view that. Now, the system is designed to generate 3.69% inflation, but the reality is that the system produces significantly less inflation than the 3.69. So, what does this mean? What this means is there is a very legitimate case for pump, right? Because this is how markets are designed, right? Markets are designed to pump based on their existing circulating supply. And if you're building a system where the circulating supply is designed to be locked away, well, then you're increasing the odds of a pump by limiting the circulating supply. And that's essentially what HEX is all about, right? Long story short. And the incentive is that you earn more coins, simply put. So this is what it is in plain English. You buy Hex, you stay Hex to earn more Hex, right? And this is why it's so good, because the system is just reproducing itself, which is a store of value that always works, is never down, and consistently pays you. So what you're looking at this chart is the inflation as been mentioned by the system post big payday, because again, that is when the system really started measuring the inflation correctly. So this is why, I mean, if this chart went prior to this, it would look like a complete mess, right? It wouldn't look right because it would be a whole bunch of squiggly squaggles and all this. And we'll see this in other charts as we move forward, probably. Um, but post big payday is when everything is basically the end of launch phase. That's the best way to put it. So this is why I track certain things post big payday, because that is when they really became evidently clear that they were performing as they should be, or as they should have been, or as they should be performing. That's the best way to put it. Right? Because Bitcoin really isn't in its truest form when it's not operating as intended or designed, right? And this is what a lot of the fights back in the day were about. And some people won and some people lost, right? And this is why we got the Bitcoin we got today. And this, of course, leads to a lot of the BS that we have going on present day, right? I mean, we literally saw a replication of all these big connects, right? And everybody's acting like that's not what it was. But clearly, that's what it was, And people are acting like it's all good, Now, yeah, the bear market, sure, it's a real thing now. But when we were talking about the bear market, we were crazy. We didn't know what we were talking about. Blah 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 blah. Yep. So much for that, right? And again, it's just about analyzing sentiment, understanding the neural impact, right, of what is being said, what is being thrown out there. And when you get caught up in that, in the FOMO, right? Because that's that danger zone. When you get caught in that FOMO, you make decisions that you wouldn't make if you were thinking, right? And this is what staking saves you from, at the end of the day, right? And this is ultimately what it's all about. It's about saving you from yourself from making bad decisions. This is what staking is all about. So as you guys can see, even after uh, a year of launch phase plus a year of operation, flawless operation, you barely got to the 2% yield, APY, to the 2% inflation mark. And now we're honing in on year three. I think we might be like 100. What was today? August. We're like 120 days away to the day, right? 4 months from year three. And we're still a whole percent away from reaching annual inflation. Annual inflation. Annual inflation. After 3 years of running. Yes, check. Get your hex. Because if you don't, you get left behind because the system don't care. And here's another good example of why, right? The system is so phenomenal. You see all these other systems getting hacked and all this stuff, and Hex is designed in such a way to essentially limit that. All these protocols running on the chain, they're exposed. Hex is literally locked inside of the consensus mechanism so that it's securely stored away from the exposure nexus, right, or the attack vector, right? Like you got to get inside somebody's wallet in order to affect anything within this protocol. And this is important to understand because this is how safe it is, right? And a lot of people don't understand that. And this is why when you get scammed into clicking on links, that is the only time you hear about anything negative happening on the Hex blockchain, right? Really, if you want to look at it that, right? Like I really do think of Hex as its own network, even though it's not on its own chain, because it does have its own measuring stick, so to speak, right? And this is what the T-share rate is. And if you guys look at this orange line we have in this chart, this orange line is tracking the T-share payout sum. So every day that you have a T-share since inception, I'm tracking what the system is paying you. As you guys can see, early days it wasn't paying anything. 2 hex. I mean, the first day I think if you were staked, you got 1 hex, maybe 1.13 or something like that. Like you weren't getting anything. And this is important to understand because that's what delaying gratification is all about. If you delay gratification from day one to today, 970 something days later, you'd be at 4,600 to 4,700 hex per T-share. That's not a little bit. If you were around early days and you staked long, say 5 years at least, right? You could probably afford a lot of T-shares at the time. 1,000 isn't a stretch because T-shares cost nothing back in the day, right? Hex cost nothing. And this is how you can earn all this yield with this system, is by understanding it and playing your position. Because as a T share costs nothing back in the day, a B share costs nothing today. And then you go down to what a M share, then a K share, then I guess a 1,000 share or 100 share, C share, right? So this is another way to look at that T share payout sum chart, right? On a return basis, you're at six figures. Payout T share sum index. That's what that's tracking, 425 or 4,251x, right? Based on these values. I mean, 4,000x, really? Just by staking your coins. Something to think about. Payout per T-share index is just highlighting the growth in the payout per T-share. And you've basically seen it's gone 5x since inception, which was at just 1. Daily payout index is just highlighting the growth in the daily payout the system does. And as you guys can see, it's 18,000 or 18x, or I'm sorry, 180x since inception. And, show me a system that's done that. Yeah, you can see the effect of that in the returns. System sells itself once you understand what these charts are telling you. So this chart is the everybody gets paid chart. I have the HEX price in white, payout per T-share average all time in yellow, payout per T-share average for 28 days in orange, and in magenta, the 55-day payout per T-share average. And if you guys can see, payout per T-share over the past 55 and 28 days are pretty much similar, right? They're pretty much flat at this point. I don't know if that's a good thing or a bad thing, but that's what it is. The good thing is that the all time keeps creeping up, right? Which means that over time, our payout is going to consistently go up. Now, if the past is anything like the present, then this looks like it's a good time to be buying Hex indeed. Because the slope hasn't changed, but price is near this area where it's found support before. And prior to that, it battled with this area. And it ultimately snapped through and found its own way, right? And then it ultimately has separated itself again. I'd say it's probably a good wager to think it's going to do so again, right? Because this is the way you got to look at things. If it did it twice, what are the odds it's going to do it again? And the fact is, it's probably pretty high. Because why would the system? I mean, hey, if it gets that undervalued. So this is what 1 cent looks like, right? Now, what are the odds that we actually see that based on this? Assuming this holds, right? The probabilistic scenario here. What are the odds that Hex falls below its value uh, mechanism? Basically, hard to imagine that. This is the payout metrics. Here we're tracking total T shares, daily payout. And this is essentially the systemic payout and the payout per T share. Now the payout per T share is this number divided by total T shares. This is why it's almost equivalent, right? 67 million divided by 10.4 million in T shares. 67 million hex divided by 10.4 million T shares gives you 6.42 hex per T share, right? For today's payout. And the thing I'd like to impress upon you is realize that the volatility in these metrics is strictly to the upside. So the only surprise you experience by being staked in the hex system is upward, never downward, because the baseline only moves up higher, right? And I got a chart that shows that, so we'll get to that. Here we're talking about the correlation of Hex versus ETH and Hex versus Bitcoin. And long story short, zero correlation. This is what this R squared number is telling you. And if this number was in, I guess, English, it would be a 0.0 or a 5 zeros, and then a 3 at the end. So not even a 0. So it would be like this number, but with 2 more zeros. Um, zero correlation. Now, why is that? And it's very simple, right? Hex returns on the x-axis, Ethereum is on the y, as well as Bitcoin is on the y. Now, what you got to realize is that each plot is a return. So this would probably be a negative hex return and a negative Bitcoin return because it's right to the left or right on 0. This chart doesn't really show it that well. I should probably make this chart a little different so that it's more visible. Especially if you're not new. If you're new to this, you probably got no idea what the hell's going on here. But based on where the 0 is, we could presume that this is the line that's dividing positive from negative on the x-axis. So this is probably a negative hex return, but also a negative Bitcoin return, right? So if you look over here, you have a positive hex return because it's to the right of the 0, and you have a positive Bitcoin return because it's above the 0. And this is how you read that chart. But long story short, there's a lot more plots to the right side of the x-axis for hex than there is dots above the 0 for Bitcoin. And this is how you have to read this chart. The right side of it, of the x-axis for hex, and the upside of the 0 line for Bitcoin and Ethereum. And you're just going to note that there's just a lot more dots on the right side of the 0 on the x-axis than there is above the 0 for both Ethereum and Bitcoin. And this is why Hex is decorrelated. You're getting A, more positive performance from Bitcoin or from Hex, and B, non-correlated performance, because as you guys can tell from this data plots, as I just showed you, you're seeing more positive performance than you are negative from Hex versus Bitcoin and Ethereum. And that's really the key, right? That's really, really the key, is understanding what your probability set is going to be over time when you're in an investment. I mean, nobody invests to maybe make money. I mean, everybody invests to make money. And I think that that's really the crux of the issue that a lot of people just like to forget because they like to get caught in their emotions, right? Like all this emotional reactioning to what people say about certain things. Like, when Richard is talking to all these Bitcoin maxis, it's borderline disgusting. He's talking to himself, right? Nobody's paying attention. Nobody has a clue. He's talking to a wall. Now this chart, this is the key. This chart is showing the correlation between T shares, right? The dollar cost of a T share and the dollar cost of Hex, right? Now, what I'm trying to show here is that they're correlated 100%. Now, the reason I want to show this is because we know that the T share rate only does one thing over time, and that's go up. So, if the T share rate is constantly going up, then you can presume by default that the dollar cost of a T share will constantly go up as well. And that's exactly accurate. That's exactly how it works. And this is why I am constantly tracking this correlation on a 21, 34, and 55-day basis because I want to be sure that the system is behaving how it's supposed to. This is a way for me to check the system essentially. Um, I think it's right. Could it be wrong? Wrong? Sure. But so far, so good. And we can kind of see little aberrations here and there, but it sticks, it's consistent, it's never changed. And this is how the system is really working as intended because these values are supposed to be correlated. They are supposed to be 90% correlated, 100% correlated. The dollar cost of a T share is supposed to be tied to the dollar cost of Hex. That's the whole point of the system. It's to give it a measuring stick, right? And that's what the T-share is. And this is what very few outside of the community understand, right? I mean, I don't think there's anybody outside of Hex that really understands Hex at all. And this chart shows it. Correlation, one, T-share, whole time, ever since it broke out May 2021. And that's how the system is supposed to work. Not supposed to be separated. Supposed to be circular, closed loop, right? So that it successfully defends itself against itself and it doesn't go out of whack. These are how good systems operate, believe it or not. So let's move on here. Almost out of the woods here. This is just the ROI multiplier from all-time low chart. As you guys can see, as of yesterday, we're at 871x. Pretty cool. Total value lock chart. This is showing that total value lock is, now this is the staked amount. The Hex staked in the system, 3 billion as of yesterday. Now this number is different than the share amount, right? The share amount is letting us know how many T shares are locked into the system. This is just letting us know the Hex count, which is not the same thing. All right, here we're showing the total value locked per the number of stakers. And if you guys will see, this is the best chart that I like to use to show the log-based 2 nature of Hex. Now, if you guys look at the yellow line and the pink lines, you'll notice that every pause, every ebb and flow pretty much happens along this scale. And this scale is log-based 2. Now, how do I know this? Let's just look at this. Power 2. All right, now looking at these values, we could take just anything, right? The price of Hex to be N and 2 to the N to be these values here. And if you look at the scale, you start 1, 2, 4, 8, 16, 32, 64, right? All the way to 524,288. And you're going to notice something peculiar. This chart lines up exactly with those values because the scaling is exactly log base 2, because that's exactly how I made it. But that's not the catch. The catch is that Hex actually stops at these points. That's what's interesting about it. It traverses them, it stops at them, it always is always hovering around them. Right here we are, all the way down at 16,000, right there, right around there, 20,000, whatever the value is. It's hovering around there, and it stopped at 32,000. Right here we are at 30,000. Right, we hovered above 65,000 before we finally went below it. Right, and we went right through it like knife through butter. Right, same thing over here, 131,000. Right, so it seems like every time we're losing a couple levels or so, or a level or two before we stop. Right, we were at 524, we went straight to 131, went back up 262, then down 262.65, right, up to 131, then down. But this time on this down move, we went all the wow. You know what? I think this is actually the bottom. Just based on what I've seen on charts a million times, and the angle of the drop and all that stuff. Usually, the last drop is the steepest, and the steepest typically means that that's pretty much it, right? Like everybody that's gonna unload it, and yeah, sure, you might get some chop along the way before you actually see a rotation upward, but that's pretty much it, right? And this could be considered decapitulation, just long, slow, and drawn out. But time will tell, right? Time will be be letting us know for sure. Um, but again, stopped at that log base 2 level, right? Which coincides with 15N, right? So maybe we're just at um, that level, right? Now, Metcalfe's law states that the value of a network, right? It's really just a data network. It's not telecommunication. It's just data, because that's all telecommunication is. It's just data packets being transferred back and forth, right? I mean, it even states it right here: packet switching, message switching, and in this day and age, everything is packets, right? Voice over internet. It's all packets, and that's important to understand. So, as I was saying, Metcalf's law states the value of digital network is proportional to the square of the number of connected users of the system, right? So if we go back at that, maybe we're at 15, some magnitude of 15. That puts the value at 30,000, right? But we've come all the way down from magnitude of 19, right? All the way down to a magnitude of 14. Is that accurate? Yep. 16,000 looks like a magnitude of 14. Yep. So, random as hell, of course, but it's what's happened, it's what we can account for, and it's what lets us know that HEX is log based too, right? It's always stopping at these values, playing around with them, and stuff like that. Very important attribute of HEX that you should really pay attention to. Staked HEX per staker. Interestingly enough, during this whole sell off, supply has just magically disappeared, right? Not only in circulating fashion, but also in stake fashion. Very important to note, especially as T shares get more expensive. Payout per staker has also gone down because T shares have gotten more expensive, right? Um, as time moves on, the T share rate marches on higher, and this is the thing that a lot of people just it's hard for them to really get that right and what that means. And this is why you have to really understand the t-shirt rate. You can't really mess around with that, because there's going to come days where this thing is going to move 100 hex per change, per calculation, because these stakes, right, that are coming out, that are from early days of hex, they're going to be worth a whole lot. And those are the stakes that are going to really do the hex rate, t-shirt rate changing, right? That's going to break necks, and people are not going to understand what the hell is happening. I mean, imagine there could be a day where we see a thousand hex. I mean, we just saw one that was 755 hex not long ago, right? Pretty funny, right? So these are the kinds of metrics you got to look at, because people don't understand exactly what's going on financially, and we're going to get into that after I'm done with these charts, just to tidy it up nice and tight, right? Um, so okay, here we get to the how the APY works, or how the ROI works for staking, right? Because this is what it's all about. So as we saw earlier, we're looking at 9.59 or whatever, 9.57, right? So that's in between 9 and 10%, or 9 and 10% of coin stake percentage of the total supply. So that means that the APY that the system pays out to the pool participants is going to be greater than 36.9%, but less than 41%. And that's what we saw also, 39.7%, right? Pretty straightforward. Nothing fancy, nothing crazy. Um, But people forget all that SAC hex. That was 350 million hex. So, or was it 350 billion? It was 350 billion. Never mind me. So that's what 580 or 620 minus 580 or whatever. Or hold on, 620 minus 350. So that means that the actual hex supply is like 300 billion, right? So assuming that's accurate, let's give it a 10% bump, right? Let's say that the max amount of HEX has disappeared from the system, never to be seen again. And that's not accounting for Maximus, HEX Investment Trust, and things like that are just making HEX disappear. Right? That brings us at a floor, a rate floor of 6.15%. So what that means is, with all that HEX that's officially gone under OA hands, we're never gonna see an APY uh, on the pool lower than 6.15%, probably. Probably not. Because why? Why would they? Can't. Now, let's look at interest rates, because that's been a hell of a thing over the past couple of weeks. We've had the market really make some decisive moves, right? And now we're basically seemingly in bull territory again for treasury future prices, which means interest rates are going to go down potentially. Now, I think that we're seeing a reversal of immense proportions because of the policy errors that the Fed has been making left and right. And the market clearly has spoken to that fact, right? I mean, and we're seeing it all manner of places. This is just one facet where we can account for gains of, let's see, 7%, right? And these are levered contracts here that I'm talking about, 7%. So that's 7% when you're really only putting down maybe 10 bips on that 7%, right? So you do the math. 0.07 divided by 0.01. Is that right? Maybe 70x. Yeah, that's about right. Right. So this is how futures works, right? So again, if you're looking to speculate, go speculate on some fiat-based exchange-traded products, because as stupid as this is about to sound, it's safer than sticking your money in some random contract in crypto where you don't even know if you can get them $100 back. If you make a bad trade, you can at least click exit, 2 minutes later, a minute later. But you can't do that in a contract that just ain't giving you your money back. So these are things you've got to understand. They're important. This is what managing risk is all about, right? Where is the best probability of me getting my money back, right? This is what investing is about outside of making all your money. Because if you're not accounting for the worst case scenario, then why are you even here? You should just go be a pleb with the rest of them, right? Thinking you're going to make all this fast money when you're just not. Because that's exactly how it works. So these rate moves, as I've been saying for a long time, Fed was going to hike because they had no choice. Inflation has been out of control for a long time. Now the market is punishing everything that comes into contact with USD, right? Every freaking thing. And this is exactly why everything is hurting, right? There is nothing that isn't feeling pain unless you're understanding exactly what's going on, right? And this is what I'm about to get into right now, so people can understand the cause, right? You've had these inflationary events that have been going on literally since I guess you could say 1913, um, right? But that's obvious. Um, in terms of the dollar really getting destroyed, I went over this a while back. Let's go over it again, just because it's good stuff. Um, Important that people understand what's actually happening. Why did HEX drop 95%? Is it really people just selling, or is it really the value of the dollar that's that bad? Right? I mean, these are things that people have to learn to wrap their head around. Because what changed with HEX? Nothing. Nothing at all. So what is there to be bearish about exactly besides some schmucks selling it? Not much. And that's exactly the point, right? How else do you get to understand uh, let me see, I think this is it. How else do you get to understand what problems are present and what solutions actually exist for you to actually take action on, right? Because everybody wants to be rich, but nobody actually wants to put in the work to be rich. Everybody just likes to talk smack and pray that that's what's gonna save them. And it's just not how it works, guys. Just not how it works. All right, and this is really the home run chart. You got the dollar starting here at the beginning of the Fed, 100 years ago, or 109 years ago at this point. 100, right? 1 to 1, $1 for $1. Because this chart is showing you purchasing power of the consumer dollar. Okay, straight up, simple as that. Um, so if you go forward, what do you see? Well, from this point in time all the way to the 20s, you can see that they printed ad nauseum, right? And this was their objective. Now, what happened after 1913 through 1920? Well, we all know the Great War, right? World War One. And this is what that printing fest was for. Then they had to rein it back in, but you still had a recession, right? But where'd the recession come from in the first place? All this easy money. Because what caused it was the easy money getting called back. Yes, that's how it works. That's how it works. So we go back up all the way to 78 cents, May 1933. This is basically the end of the recession, right? As we know it, the Great Depression, excuse me, the Great Depression back in the 30s, right? And this is what we're seeing on the chart. In fact, I'm just going off the dates. Now, this is the highest point, never to be seen again for the value of the dollar. And this is when people couldn't even get their hands on dollars. Something to think about. Something to think about. Now, this is 1933. Fast forward 10 years, we have we entered the war yet? I think we entered 1941. So we were in the war. Dollar value 70 cent. But guess what? As soon as we enter kaput, and I think we entered December 1941 because that's when Pearl Harbor actually happened. Well, we were printing way before that. See, this is when Pearl Harbor happened, December 1941. But we were already down 7% in terms of dollar value at that point in time. Gold got confiscated, right? After this point in time, too. Don't forget that. I almost did, but not really, crucial to the story at this point. I really just want to highlight the destruction of the dollar and the events that really drove them. Right? War always drives the destruction of a fiat currency because that's what it's all about. And here we have it ongoing for a whole 8 years, a straight nonstop down with a little insignificant bump during the rebuilding period, right? Marshall Plan and all that funny stuff that never actually did anything. And it continues after Korea, right? Printing always starts prior to the war, and then the war kicks off. And this is what we see here, right? Um, so 50s just dropping once again, and at this point, overseas factories, labor, everything is getting sent off, everything offshore. And this is important to know, right? Because this is how you come to terms with the capital flight that we've been seeing, the job flight that we've been seeing. I mean, it's kind of crazy when you sit here and think about what America was versus what America is, and how did we get here, right? It's because of the lack of economic opportunity. People have to do other things in order to survive. You can only survive within the capacity of your environment, right? And I think it's very difficult for us to realize this because environments become so normal, but they're relatively normal. They're not, in fact, normal, meaning applicable to all, right? Growing up in Germany is not the same thing as growing up in the US. It's not. Important people understand that, because being able to have this dichotomous point of view is exactly what helped me learn all this financial stuff so much faster, because I didn't have a singular point of view where it's just a dollar in my world. I was fortunate enough to travel between two countries as a youth. So I experienced exchange rates and all that stuff early on in my life. So this is why I have it. It's easier for me to understand this stuff. So back to this 50s, right? Korean War. I think that ended about 52, if not 51. So it didn't last long. But another war nonetheless. All begets printing. And then you have the secret wars that start going on here in the late 50s, the Cold War, right? Then you got people going into Vietnam already and stuff in the late 50s, early 60s. And we all know what came of this, right? All the way into November 63. Um, so many stories surrounding this event. Uh, you know, whatever. Um, at this point, dollar value is 30 cents of the dollar relative to its starting point, right? And just continued, and it just picked up speed from this point forward, thanks to all of the warmongering in Vietnam and whatnot. And that didn't end until 75 or 77, if I remember correctly. I'm pretty sure it was 75. But there were people still out there till 77, if I remember correctly. But as you guys can see, from JFK's death to essentially 15 years later, we could just go to November 20 or November 78. I mean, that's a 50% drop, right, in the value of the dollar from then to then. And at that point, we already had crazy inflation due to the oil shock, and oil embargo and all that smart stuff people were doing, all the politicians were doing at the time. And none of this even includes, right, Nixon shock of August 1971. I mean, all of these things led us to where we are today. Everybody has to work multiple jobs, inflation is rampant, the cost of surviving is ridiculous, while the cost of good assets is, you know, on the floor, relatively speaking. I mean, you got to think about something. You can get so much hex for a dollar, but you can't go get eggs with a dollar. You can't sit here and tell me that makes sense. The number of people didn't increase. It's pretty much growing at the same rate. Right? People's diets didn't drastically change outside of the US. So, these are things you got to look at when you're trying to figure out where is the change in value coming from. Who's buying so many more of these items that we're paying that much more because the demand is that much higher? And simple answer is nobody. And this is why you come to the conclusion that it's demand side destruction, because that's what it is. right? This is them blowing up the food processing plants, right? Burning them down or whatever have you, trying to limit farmers from using nitrogen in their fertilizer and all that fun stuff that they're out here doing, right? All this stuff lends itself to a bad economic mix, right? Now you see them just going off the walls with all of the things that they're trying to do, right? They're trying to paint a beautiful show, right? For the market to really just reset itself in a crazy way where, things change at the drop of a dime. Like I've said many times before. Um, and this is something that's very crucial to understanding what you should be doing at this point in time because, you know, financial resets, when they're happening, they're just happening. And we're currently in one right now. And they let you know all the time. This is why they're wrong. This is why, they can let you know that they're wrong because they're never wrong. But this is why they now need you to use nothing but electric vehicles that you can't afford or don't need to buy or don't want to buy or whatever the case is, right? Like all these things play a role. All this ESG nonsense, it's all BS. It's like carbon credits. It ain't doing nothing, right? And this is why they push it so hard. It's not for your benefit. How is it, once again, that all the things that happen always reduce your opportunity set? How is that? How is it that it's only the same people that constantly win? It's always the same people that constantly lose. And sure, you got your onesies and twosies, your salmon that can fish upstream. Don't get me wrong. But in general, you have no path forward as a average person. The average person is really in a bad way, and they're not gonna find an exit route by trying to play the rat race. That's not what the rat race is for. The rat race is to keep people there, right? It's literally to keep people in this position where they just keep turning that wheel and don't think anything of it. I mean, I always think about what I used to think of when I was a kid because it sure as hell didn't make any sense. And this is why it's so easy for me to understand all these things that I talk about because it really was so nonsensical. All of it. You're supposed to go to school for 12 years or more, whatever the number is, to learn nothing, to then go work to die. Never mind the in between. Never mind all the traps in between. Just the whole archetype, right? Just the whole story arc that I just gave you just doesn't make any sense, right? I mean, look at this. This is how their system works, folks. Equifax sent lenders wrong info on millions of consumers, causing higher rates denials. Now, why the hell does this even matter? Well, you got to understand the system that we're trying to improve upon, right? Before you can really understand crypto. Because without that, you're just wasting your time and mine. Because you're never going to understand what's going on here or why any of this matters or why entities such as PayPal, MasterCard, and Visa do not add value to this scenario whatsoever, right? It's understanding those things that really make you understand the bigger picture and make sure you're making the right decisions with regards to your future. Because what happens if the dollar automatically is no longer an accepted currency of trade or unit of account? What do you do then? Don't you think that things like this just add more negative exposure to the scenario that is the current monetary system? I mean, you can't believe that people are okay with this, right? Because that would imply. Now, don't get me wrong. There are people that take it with, take it in stride. They ain't sweating it, right? There's plenty of people like that, but there's more people that are pissed at these people fucked up at their chance of perhaps buying a house, getting a car, getting an RV, whatever they were trying to finance, right? Plenty of people, when they learn this, are going to be pissed that this is why they couldn't buy that thing. That's all people mostly care about. Why couldn't I get that thing? This is why credit is it's such a great honeypot, right? Because people have no issue taking on debt. They have no issue not enjoying the material pleasures of nothing, because that's all material goods are. Because once you get it in your hands, you're done with it. What else do you care? It's hard for you to imagine that until you actually get there. But it reminds me of and this isn't even a material thing, but it's similar to me in many ways. When I got my first job on Wall Street, and I've been talking about this a lot lately, actually, because it's so critical for me. Like that really shaped my future. If I would have really stuck with that crap, I would have been another one of those dumbass Wall Streeters, maybe. You know, not something I really like. That's not me. You know what I mean? That's not me. It's not my thing. Not what I wanted to do. I thought it was, but when I realized you weren't really making any good trades, you weren't really doing anything original, I had no interest in that. Right? I mean, that's all it is. Is it something you're interested in or not? Um, when you gotta spend 12 hours a day average doing it, you better be fucking interested. Cause them 12-hour days turn to 14 and 16-hour days real quick. Real quick. And that's exactly why you better be interested. Because otherwise that's a lot of time to burn. If you really aren't sure. And that's something that it took me a year to figure it out. And it was a tough decision to make. But our homies is back. Um, but it was made, right? Because it had to be made. So, you know, this is the monetary system that we use every day. Why? Why are we okay with that? That's the question we got to ask ourselves, ask our neighbors, ask our friends. It's on us that our lives suck. It's not on anybody else. And until we all realize that, nothing is going to change. Everything is going to stay the same, right? Because you can only force but so much, right? It'd be nice to say, yeah, we're all going to create change and all this bullshit. But no, you got to want to be involved. You got to want to be part of it. It's not going to change just because you want it to. You got to actually do stuff, and a lot of people don't like to respect that fact. But, that's how the cookie crumbles. So understand the big picture, right? Understand the games that are being played, because financial resets happen all the time, right? I mean, look at this. This is a financial reset right here for millions of US consumers, millions of people during a 3-week period got screwed over. trying to use credit. Probably the best thing that ever happened to them too, because they would have taken on a bigger debt just for the hell of it, right? So 2.5 million credit scores was sought during that period. 2.5 million people. So say so thousand. Let's see. Damn, imagine 250,000 people. You got to think it was higher than that. You got to think it was higher than that. See over here, they're reporting 18%. And I bet you these figures are all deflated too, right? So yeah, it's definitely higher than that. Wow, they're going really hard trying to win this election season, huh? Ah, so funny, so funny. So chicken wings at wholesale, I guess this was per pound. Yeah, $3.50 at the high. Back down to a $1.53. I remember. I think it was 2014, 2015. They were expensive. I wonder how much they cost per pound. I can't remember what the cost was back then. I don't know if I can find that on the internet. I've never looked up for that, but it's interesting that they're going fucking limit down all of a sudden. Is it football season there? Oh no, NFL season. I was thinking Super Bowl though. Oh man, it's like magic. It's like magic, right? Um, so funny that these people keep trying to just waste time. Like you were already told, stop wasting your time, but you keep doing that. Now this is scary. Didn't intend on talking about this, but let's talk about this because this is weird. Now this is a chart going back to 2013. Unfortunately, I wish it went back further. This is California water futures market index, right? This is something that only institutional traders trade it, if that, assuming it's not just an index. But there are futures markets where they're tracking weather and institutional players are placing trades, trying to hedge whatever exposure they have on the other side. Maybe an insurance company, whatever have you. So, um, I guess the cost of water, right? I mean, the cost of water, the rate at which they charge it to people, I'm guessing is tied to this also, because this is how they measure that, right? But imagine, this is insane, man. $1,100 an acre per foot for the price of water, uh, up more than 56% since the start of the year, and 3x since the beginning of 2020. I mean, it's kind of crazy for water to go up like that when it's everywhere. Kind of makes you wonder what exactly it is that they're doing that restricts the flow and increase the cost this much. What's changed? Seriously, what has changed? So it's a little funky. Especially what's most convenient is that it's coming at this time when everything else is sky high. Doesn't quite add up. U.S. hits Iran with new sanctions targeting oil sales to East Asia. Not like it matters, right? How many more sanctions can they place on the U.S. on Iran? It's kind of ridiculous. U.S. stocks, blah blah blah. Oh, Taiwan. So I talked about this all the time. I don't know if anybody really catches it because nobody really like pays attention to macro shit. So as you guys can see now, World War III is like on edge to be started because these people are just looking to start something, right? Because their whole objective is to cause chaos into the midterm so that they can do what they have to do to accomplish their so-called goals, right? Which is to get their people reelected or not get our people elected, right? Because there are not our people, but people that are not with this crazy shit, not with these draconian measures. In short, um, so it's tracking stuff like that, right? Like this is how I make these crazy calls that they're so far ahead and all this stuff. Like it's just paying attention to what is really happening, what is reality saying and doing. A lot of people like to pay attention to charts and all that's cool, but the big money is made in the flow of human emotion, not on the chart. Sooner you learn that, the less trades you make, the more cake you bake. Very simple. Very simple. And at that point, it's just a matter of you figuring out how it is you best bake that cake, right? Because at the end of the day, that's ultimately what you want to do. You want to make a successful investment and grow your capital, right, over time. And this happens by being smart, not by being impatient, inconsistent, not strategic, right? Like all these things that I talk about all the time, I talk about them because I'm talking to myself, because these are things I need to make sure that I'm doing. And, you know, practice makes perfect. If you talk about these things, conceptualize these things all the time, they become reality to you. So now you guys can start asking questions. Throw them, because otherwise I'm gonna wrap it up within the next 10 minutes. Already going on a couple hours here. Sorry, but as you guys know, all this stuff gets very intricate, very heavy duty sometimes, right? Because there's a lot going on, whole lot going on. Pulse chain still in the works. You know that thing is taking as long as it takes. We're already, I think, over a year since the end of Pulse Chain today, actually. Uh, it's the first sack, excuse me, ended today, right? Is that right? Or am I thinking about the second one? The second one ended today. Pulsec sack ended today. So yeah, that was a year ago. And more people than ever know about that sack and Pulse Chain sack now. So with all this crazy stuff that's going on in the world, you got the dollar on the verge of just becoming non-existent. China, Russia, India, Brazil have started their own currency rail where they're no longer concerning themselves with the trade flows of the dollar. Now, while I just mentioned only a few countries, what you have to understand at that is that all of those countries have bilateral partners as well that are not restricted from trading within that corridor. Because if they're doing business with the US, they're just doing business with the US. If they're doing business elsewhere, well, they're doing business elsewhere. And that is not going to impact their cash flows or how they conduct their affairs. Right? So this is important to understand. So yeah, as you guys can see, there's a whole lot going on. This looks interesting. Let's see if this is anything we can look at. This guy's articles get very long, so these aren't the good ones to go through here. Oh, this is funny. LA County removed citizenship requirement for government jobs. Only in California, man. Only in California. Uh, all right, let's see. Okay, when did this recession start? It's a good question. I like to think that it started really Q4 2021, uh, maybe Q3 2021. But I think that's when it started. Q2, Q3, 2021. Let's see. Yeah, I talked about that at the beginning of the stream. Funny, right? Uh, Yeah, it's interesting to see like how they're prodding and probing China of all countries. Like this is how bad these people are trying to cause chaos, right? Like they're trying to provoke a country that could probably do something, some way, somehow, to some people in a negative fashion and get away with it, or start something. Because as I state all the time, why is it that Biden has not sent U.S. troops into that country? Once you learn the answer to that question, you will know everything is fake, straight up, because that's the answer. And there is nobody that can tell you otherwise, because that's literally how it works. Only a president can issue travel orders of that magnitude. And guess what? He ain't one. Said it before and I'll say it again. He ain't one. And that has been proven time and time again also. Just read the 20th Amendment. It's right there. So let's see if we got any other questions. Let's see. All right. Nah, there ain't no books for that. You gotta learn how the market works. And there's nobody really telling you how the market works in a book, because by the time you read it, that's changed. So your best bet is to take some time and experience the market and learn it that way. Because you got to understand different asset classes. You got to understand how those asset classes react to whatever's happening in the real world. And then you got to understand how those asset classes impact, right? The prices of those asset classes are impacted by the real world, which is the opposite of what I just stated. So you got to be able to look at all sides of the coin. Long story short, right? I mean, you look at all these guys on Wall Street, they have no idea what to do. Zero. Zero. Right? They don't know anything. I mean, I find it comical that people in crypto are looking to them for information. Like they still haven't figured out the trade. What exactly are you looking for? They don't know what to do. They're still trying to figure it out. You're already ahead of them, right? You are already ahead of them. So, something to think about. If you want to think about managing your portfolio, what you need to think about is what kind of cash flow can you generate, right? Fiat side, and what kind of cash flow can you generate crypto side. That's what you need to think about. When I think about crypto, I think about it long term. I don't think about it short term. To me, this industry is so young that there is no reason to be selling anything unless you just feel like it, because you're going to reinvest in it in the future. That's the only way. Outside of that, I really have no idea why anybody would uh, get out of crypto permanently, especially now when it's not 2017 anymore. Like now you got Hex, and hopefully soon we'll have Pulse and PulseX, and we got Hedron right now. And we got Maxi right now, right? Like we got all these good things that you can actually put money in right now that are gonna make you money right now. So, you know, earning crypto yield is not easy, as we've all learned the hard way. For those that didn't know, right? But now you know. So let's see. Forget about Pulse. No, didn't I finish talking about that? Demand is pretty ridiculous for Pulse versus everything else because everything else out there pretty much sucks. Um, you know, you got to be ready. When Pulse comes out, there's going to be a lot of people that are going to be ready to buy. A lot of people that are going to be ready to sell also. And a lot of people that they're going to put a lot of money in at the start because they missed the sacrifice. And that's something that you got to understand, especially if you're trying to figure out what to do with your pulse bag. Like, figure out what the players are going to do when the chain goes live. That's what you need to be doing. And whatever you see, that's going to pretty much give you what you think is going to happen. Because your decision making process is yours, right? Nobody else can make decisions for you. So this is why you got to look at it like that. So, yeah. Hope that answers your question, homie. Pent up demand, long story short. Let's see here. Yep. Wrecked is the word, kid. And this is what people get when they mess with fake crypto. Long story short, don't be a victim. Coffee is live, so you might want to go over there after this is done. I'm going to wrap this up shortly. Ah, yeah, right. Yep, this is a good reply. Manager a risk portfolio is setting up different tiers of different risk in advance and not shifting because of markets. That's accurate. That's basically what I said, right? Like I look at crypto with a specific time frame, right? And for me, it's strictly long term. When I'm looking at my speculative plays, right? Like they're relative to what they are, right? However I trade them, whether it's a futures contract or an options or whatever, right? Like I'm gonna trade it however I'm trading that. And that's how you got to figure it out. There is no book for anything that you're going to attempt to do. All you're going to get is boilerplate language, nothing that helps you. You're not going to get anything that you can't get from just Googling it, basically. Straight up. You're just not. So do that and, make up your own thoughts, have your own ideas, have your own process, and, good luck because that's how you do it. That's how you do it. Let's see here. Oh, how about that? Well, I retract my statement. Let's see. All right. Maybe. I don't know. I think that if HEX isn't bottomed yet, which I think it has, it definitely will by November. I'm sorry, September, because that's when it topped out. And given that crypto market cycles are 4 years in total, 3 bull, 1 bear, typically, right, on average, that's what we've seen. I expect that to be the case here as well. So we shall see. I'd love to, but people don't really like watching that. So we're gonna wrap it up right here. Thank you guys for coming through. And yeah, holla at you. Peace. Right? The reality is that I want to be rich as fuck. There's only one way to be rich as fuck. That's by sitting on your ass the longest. Yep. That's it. Yep. That's the secret. The God well told you. Richard done told you. I done told you. Kareem done told you. Maddie done told you. Everybody done told you. Everybody done told you. Shit, motherfuckers still acting like they don't know. Appreciate that.
Yeah.
I appreciate
So
that.
100% safe. There's plenty of games left.
Valiant done told you. Yo, everybody said it. Man, hey, you know what it is, man? Everybody done told you. Y'all deep. Everybody. My God. HEX.Asian